Is pet insurance a scam? I spent like $9,000 on my dog in the last few months, and the entire time I kept wondering, would pet insurance have helped this situation? According to a MarketWatch survey, approximately 45% of pet owners have pet insurance, but it's not always a straightforward decision. And after doing some research, I've zeroed in on a few things that might make your decision just a little bit easier, so let's get into it. Because my dog's health problems were pretty extreme and happened in pretty quick succession, I figured that the costs I would have saved by having pet insurance would have also been extreme. But it turns out they really weren't. First, I'm going to request a quote from Embrace Pet Insurance for my dog Georgia as though she were just a 6 to 12 month puppy with no pre-existing conditions. This is going to help us get the best rate. So I'm going to navigate to their page, and as you can see, they're trying to steer me toward their $50 a month most popular plan, which is already raising some red flags for me. Because typically when the UX is trying to push you in one direction, it's because that plan is actually more profitable for them. So this $50 a month plan is going to get me a $5,000 annual reimbursement limit, a 70% reimbursement rate, and a $750 annual deductible. So in layman's terms, this means you're going to pay about $50 a month for the plan. You'll be responsible for the first $750 in expenses each year, and then they'd reimburse up to 70% of each accepted claim. That part's important, accepted, up to $5,000 per year total. So we're going to play around with those limits. We're going to try to figure out what the optimal plan is. But before we do, I'm going to create a plan that I actually probably would have done at the time had we gotten insurance, just to see how things would have played out differently. So I'm going to choose the unlimited annual reimbursement. I'm going to pick a $1,000 deductible because I know that that's going to help lower my premiums. And I'm going to choose a 90% reimbursement rate instead of 70%. That way it'll cover 90% of each accepted claim after I spend $1,000 every year. Now, this plan for Baby Beans would have cost me about $88 per month, which means that by the time she got sick, we already would have spent $5,016 in premiums. And it appears we would have hit our $1,000 deductible in October 2022, and then the insurance would have started kicking in at 90% coverage. So if you're keeping track, that means in insurance world, by October 2022, we are $6,016 in the hole. And then the rest of the charges in 2022 amounted to about $3,900. And then our deductible resets because it's January. So of those 2022 costs, the insurance would have covered 90% of them, and my husband and I would have paid out of pocket $394, which brings our out-of-pocket costs in insurance world up to $6,674 when you include the premiums that we also would have been paying every month. Now in 2023, our costs were about $4,100 because she had a very expensive, elaborate surgery, of which we would have paid $1,000 toward our 2023 deductible, and then the insurance would have kicked in, which would have left us with $311 out of pocket and then $176 more in premiums. So in insurance world, we're talking $8,161 out of pocket compared to the $9,006 that we actually spent. After just 9 more months of paying $88 per month in premiums, we would have been neck and neck, assuming nothing else goes wrong in that time. But is there a better way? So let's assess our ultimate risk-reward strategy here and try to hedge our bets. According to MarketWatch, the average cost of pet insurance for cats is between like $14 and $24, and for dogs, it's between around $23 and $48 per month. Now, this is going to depend on your insurer, the breed of the animal, how old the animal is, but the cheapest dogs to insure, not surprisingly, it's Dachshunds, Mutts, Australian Shepherds, which actually did surprise me, and the most expensive are Bulldogs, French Bulldogs, German Shepherds, Golden Retrievers, Labs, and Rottweilers. So we're going to link the full list of MarketWatch's research on the least and most expensive dog breeds to insure in the description. But when it comes to claims, the average claim paid out was $278, which made me realize, wow, yeah, we might just be that unlucky. It was also worth noting that Lemonade and Fetch are the only 2 insurers who don't have upfront enrollment fees or monthly transaction fees. So let's figure out how to get the most bang for your buck and how you can hedge your bets strategically. So Beans had a ridiculous amount of things go wrong in a really short amount of time, and it still amounted to less than $10,000 total. And while I initially ran the alternate reality math with an unlimited reimbursement budget, the monthly premium drops by 30% when you lower your annual reimbursement to to $15,000. Knowing what I know now, I think I'm comfortable declaring that most pet owners are probably going to be fine risking it with a $15,000 maximum annual reimbursement amount. It's probably a safe gamble. It kind of seems like a sweet spot. If you took this same policy and you selected $15,000 instead of unlimited coverage, it's going to cost $63 per month instead of $88. And since every policy is different, here's how to think about this and which level is going to make the most sense. All right, so with the Embrace quote, I can see that I'm paying $50 a month for $5,000 of annual coverage. But for just $13 more, I get an additional $10,000 of annual coverage. So at that point, the reward that I stand to gain, an additional $10K per year, effectively costs me $156 more on an annual basis. To me, that's an asymmetric reward for the cost. Similarly, I can see that when I select a 70% reimbursement, I would pay $50 per month. But when I bump up to 90% reimbursement, it's an incremental $12, which means you're getting an additional 20% of coverage on every accepted claim for $144 more per year. And lastly, I tend to go for high deductibles versus low deductibles. For example, if I had selected $250 instead of $1,000 for my deductible, the price of my coverage would have doubled from $782 per year to $1,650 per year. So to save $750 on my deductible, I'm paying $868 more in premiums, which doesn't really make sense. I was also wondering, is there an ideal age to insure your pet? Because we mentioned earlier that when you are insuring a puppy with no pre-existing conditions, you tend to get a better rate, but is that assumption true enough to justify the likelihood that you're probably going to pay a lot of premiums over several years wherein nothing is likely really to happen? Getting pet insurance earlier in a dog's life can help offset the costs of life-changing or end-of-life care. But in looking at the difference in cost by age, also from MarketWatch's research, there's actually not typically quite a big jump in price from age 1 to 5. For example, for the mixed breed, the average price to insure a 3-month-old puppy was $30, and that same dog at 5 years old was $38. The largest jump in price actually happens between ages 5 and 10. So to me, that indicates from a pricing sweet spot risk reward playoff strategy that insuring somewhere around age 5 is probably going to be the best bang for your buck. Most policies do have waiting periods because they want to avoid a situation wherein someone notices something is wrong with their pet, gets insurance, and then immediately tries to use it. And if you think that you're gonna get away with like a little light insurance fraud, maybe don't, because most pet insurance companies require you to submit documentation in the form of doctor's records, doctor's notes, etc. to prove that there was nothing wrong that you knew about. So how does pet insurance work when you actually go to use it? You're gonna visit the vet and then you're gonna pay the vet. You are responsible to pay them at the time the service is rendered. Then you're gonna get an itemized invoice from the vet and you're gonna use it to submit your claim with the other required paperwork. And then you're gonna wait, probably for months. And then if your claim gets approved, they will reimburse you accordingly. But remember, this usually takes months. So pet insurance is not a substitute for having an emergency fund. The bottom line for me is that I love salmon beans to the point that I would probably bankrupt myself trying to fix them. So I am actually probably quite a good candidate for pet insurance. But based on what I know about how insurance works in practice and how often claims are denied, and now that Beans has these pre-existing conditions that are not going to be covered in the future, the jury is still out on whether or not I am going to get pet insurance. But regardless of what I choose, I hope you now feel more prepared to make a more informed decision and that you can be savvy with the coverage that you choose or don't choose for your very own salmon beans. And if you want to hear the full episode of this week's Money with Katie show, make sure to click the link in the description of this video. Before we go, comment below what you thought the most important part of this conversation was. If you have pet insurance and you love it, tell us below. And please remember to like and subscribe to our channel if you're loving our videos.